Venture South is a lending company, and we're lending in the missing middle, the space between $2,000 and $50,000. We do that. We make those loans in the Philippines and in Colombia, and those my subsidiary companies in those two countries are lending out in local currency to small and growing businesses. So the businesses which we're financing are doing everything from small handicrafts to agricultural supply chain to small businesses and machinery, really the full gamut of businesses. And these are the businesses which we feel are the ones of the engines for job growth and growth in the economy. And so that's why we've chosen to focus on this space. There's a real lack of financing in this space. All the concentration's been into microfinance and the banks. And so we're trying to finance these businesses, which is helping to grow the economy, tax income, and of course job creation. It's a good question, and I think it's in some respects it's a little bit complicated and long question, but I think there are several factors to it. I think in one respect, microfinance has been so successful because it's been very specific loan products and very easily replicable. And once you get up to larger loan sizes, to $5,000 and $10,000 and $20,000, you're really looking at businesses which need tailor-made or more specifically catered loan products. And so the microfinance lenders haven't really grown up into the space of the microfinance very much. And in terms of the banks, on paper they can lend into this space and they should be lending into this space. My feeling is that there are a couple barriers with that. First of all, the central bank requirements are quite onerous, and the reporting requirements that the banks have to the central banks in terms of their guarantee requirements for the loans they make are quite complicated. And often the small businesses can't meet all the guarantee requirements that the banks require, and the banks require those because of the central banks. And beyond that, I think it's frankly just more profitable for the banks to be lending at higher levels. And I think there's a level of sort of lack of interest. They have to get their hands dirty, they have to get out of their conditions office and go off and meet the clients. What we're doing is we're really choosing the hands-on microfinance approach where you're meeting your clients in their place of work, in their home, getting to know their neighbors, but we're using bank loan products. It can be a tough space to start off in, and you really need to learn your clients and know your clients. And once you're able to do that, then it's really a story of scale. You need to be able to grow. So we've been, you can be profitable, but you have to have a scale to do it, which, and by scale I'll say, over $5 million portfolio to really make it worthwhile to do. And getting there is the trick, and that's what makes it, it's less profitable to start off, and then learning the space and learning who your clients are, because each of these businesses are quite different, and often their financing requirements are different. So it is tricky, and it can be difficult to enter into the space. It's a broad variety of things. We have some businesses in Colombia who are making clothing manufacturers, and so we're making a loan so they can buy a new machine, which is weaving sweaters and other clothing. And what the businesses will do is they'll buy that machine and then they'll employ somebody to work that machine. We have lots of different other small businesses, bakeries, small food manufacturers. In the Philippines, we have a lot of handicraft exporters, and often what these businesses will do, they'll receive a purchase order for $30,000 or $40,000, $50,000 for Christmas decorations, and they'll receive it in April or May, and they don't have the financing that they need to be able to meet that purchase order. They will be paid 6 months after the order comes in, and so during those 6 months they need working capital, they need to be able to pay their employees and buy the raw materials. And the purchase orders often come in with a 30-day requirement, so they either say yes or no to the purchase order within 30 days. If obviously say no, they don't go forward, but if they don't have that financing to be able to say yes, they will be able to meet that order, they lose that client. And the banks will take 2 to 3 months to respond to those loan requests. We turn over our loans in 3 to 5 days generally, so that they're able to meet those loan requests and to grow their businesses. In terms of the social needs, I think many of us know that there continue to be needs in Latin America. It's a region that has great disparities of wealth. There's enormous wealth there, and there's still quite a lot of poverty. Those poverty levels vary obviously quite a bit by countries, but you're looking really at 30, 40 to 50%, even 60% poverty in most of the countries. As I say, it varies by country. So the need for it, I think, still remains self-evident. In terms of the impact investing, it's been growing like it is around the world. It's really, impact investing in general is just a term which has grown up these last 5 or 6 years. So it's still relatively new. And investing in general in Latin America varies enormously by country. There's a lot of exciting things going on in Colombia, a lot of exciting things going on in Mexico, not much going on in Venezuela, limited extent in Ecuador or Bolivia. Brazil is so large that it's really sort of a region in and to itself practically. So I think you could certainly say that there are parts of Latin America where it has been slow to take off and not as much has been going on. But there are other countries where it has actually done pretty well, and there's a lot going on. I know the IDB is looking at it, and they've got a couple things cooking, I think, to try to help grow this space. And there have been some commercial funds that are also launched. There's less the big institutional money. There's $250 million funds which are European government funded going into Africa. And there's less that in Latin America. I think there's a little bit of an impression from some of the government agencies perhaps that there's less need because the region is more economically advanced than say Africa. So there's not 10, 15, $20 million deals which are happening. Many of them really remain quite small. But they're happening, and what's exciting about it is that sort of the ecosystem is developing. You're getting the financing from a company like mine, but you're getting the small businesses, whether they're sort of organic soap producers or green gold, or of course the fair trade coffee or whatnot. There's getting to be a broader ecosystem of things going on, and you're getting the feeling that a critical mass is developing. To be able to grow the space further. It remains smaller compared to big ticket, $100 million deals that the petrochemical industry is doing, but that's really not who we are. That's not our space. But if you're looking at the businesses who are doing, clean water or need investments of 50, 200, 500, $1 million, there's a lot of interest in that. And actually, in one respect, the bottleneck, I spoke about the missing middle, the bottleneck being for debt from $2,000 to $50,000. You could say there's a bottleneck or there's a missing middle in equity also from the sort of $20,000 up to $300,000 investment size. For international investors, they still really consider that to be too small to be worth their time to do the due diligence on an investment of that size. My feeling is that that's the exciting space. That's where you're really going to have the businesses with potential of larger and significant growth. And there's not as many deals, frankly, of $2 and $3 million where you're going to have the financial and the social impact that you're looking for. And that's where a lot of the external and the international money is looking at for deals certainly over $500,000 and probably over $1 million. My feeling is there's a lot of need at those lower levels, and they still haven't seen as much of the local financing coming for that, wanting to invest equity at $50,000, $100,000, and $200,000. And my feeling is that if, for investors' point of view, if you're willing to take a look at investment sizes of that range, from sort of $20,000 to $300,000, you'll have a great selection of businesses you can invest in.